Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps underperform larger peers even as the stock markets see a tumble in the last 30 minutes. Utilities, FMCG see some gains.
India pesticides gains on the launch of a herbicide for exports. The management tells CNBC-TV18 at peak utilization, the company will clock 150 to 160 crore in terms of revenues from this launch.
An overweight rating from Morgan Stanley gives Tata Chemicals a fillip. The brokerage expects market conditions to stabilize from the fourth quarter and Chinese demand to pick up with Beijing reopening.
Kesoram Industries slumps after losses widen in the third quarter. The management tells CNBC-TV18 the company is not on the block even as it stresses that refinancing by the first quarter of FY24 is key.
Bank of India slides after reporting third quarter numbers. Write-offs rise to about 2,500 crores on a quarter-on-quarter basis, even as the PSU lenders delivers healthy net interest income growth.
Okay, all the top headlines at this point in time on Midcap Radar. For the markets, we have fallen substantially from the highs. The Midcap index is down 200 points. You have the Nifty, which is, of course, in the green yet, but has fallen from the top. It's up around 53 points, and at a point in time, it was up around 120, 130 points. So that's almost a 70-point fall from the top. We have the Bank Nifty, which is putting that pressure right now. So that's 222 points gone on Bank Nifty. So we were talking about the 20-day moving average on the Nifty of 18,051. And we are almost 100 points away from that, and the advanced decline ratio comfortably in the favor of declines. Well, Reema, yesterday it was a volatile trading session, but we closed in the red finally. It's important to see the last 1 hour of trade, especially because we do not have any cues from the US markets, but we did see a positive recovery from the lows after opening lower.
Absolutely. You know what I'm most interested is in this Bank of India reaction, right? The numbers were not that bad, but the stock has fallen close to about 4.5%. So the question is, after the kind of run-up that we've seen in PSU banks, is the good news, at least for now, priced in? Are the strong earnings of Q3 priced in? Because look at the way Bank of India slipped post numbers. It's stabilizing now. It's still down 4.5%, and we'll chat more with the management and to get more, commentary and color on the way forward. But Bank of India has slipped 4.5%, and PSU Banking Index is the top sectoral loser today. That index is down 2.5%. The heartening bit is, despite the sell-off in the last 1 hour, the IT index is actually holding on to all its gains. So pull up the Nifty IT index and you would see a flat line with a gain of close to about 0.5%. So no profit booking visible in the IT space. That continues to hold forward. But let's get to our segment, Midcap Movers. Vivek is here to take us through the midcaps that are moving around in trade. Vivek.
Well, good afternoon. Clearly, as you mentioned, some of the stocks, some of the companies that declared their results, in the trading session today, seeing quite a bit of a sell-off. So both Bank of India as well as Mastek today down. And, you're actually seeing the pre-positioning that was built into these particular stocks, seeing a significant amount of sell-off. Now, one particular pack that's doing quite well in today's trading session, despite the overall weakness, is the fertilizer pack. So most of the fertilizer stocks today are up. In fact, actually snapping a significant multiple-day losing streak. You're also seeing NFL, Paradeep Phosphates, and RCF, all of them gaining in today's trading session. Some of the other stocks that are moving higher on strong volumes, hitting the volume trigger limits. We are actually seeing names like specialty restaurants. Now, this particular stock, if you're talking about it, just moving on to the next slide. This particular stock is up almost 10% today, and the stock has gained almost 15% in the last 3 trading sessions. Even this particular company, Tanfac, the stock has hit the 3rd consecutive session of the upper circuit limit. Some of the other names doing quite well, Kamdenu, Spencer's Retail, as well as IIFL Finance today moving up on very strong volumes. On the other hand, some of the stocks today that are losing in the session, seeing new age names like Nykaa. After a large block deal in today's trading session, stock was down almost 4.5%. Schneider Electric, Canfin Homes, and Manappuram Finance, all of these stocks are lower in today's trading session.
Okay, all right, Vivek, thank you so much for joining us. So that's all about the action and in the mid-cap space, but it's a good time to get a technical check on the market. Shrikant Chauhan of Kotak Securities is joining us now. Shrikant, good afternoon. Thank you so much for joining us. Well, we did see a recovery from the lows, and then we have fallen sharply from the highs as well. What are the charts suggesting now?
Yeah, good afternoon, Sonal. Good afternoon, Reema. I think, the markets are very clearly in the range. They are not breaking the lower boundary, which is around 17,750, 800, and it is failing at the important level of 18,050. So till the market is not crossing these levels, I think we are going to see stock-specific activity, and the way the option statistics are there, the way there is huge amount of put writing at 18,000 and on the downside 17,800, I think the markets are going to spend time between this range for a longer time. But yes, prior to budget and before the budget, most of the time we see activity in fertilizer company, in those stocks or where there is like specific expectation, like capital goods or engineering, there we are seeing some activity. So in that space, we like Cummins India, which is currently around some 1460, 1470 levels. There we feel that the stock is heading for the levels of at least 1550 or 1575, which was its previous highest level. So Cummins is a buy at current levels with a stop loss around some 1400 on the downside. We are expecting stock to do well in the near term, at least before the announcement of the budget. And we also like Ashtiya Chemical Fertilizer, RCF, which is around 125. And on daily basis, the stock is forming triangle formation. On monthly basis, it has broken almost all important levels and it is trading into a new territory. So we are expecting stock to move towards at least 145, 150 next couple of weeks. So RCF is also a buy. It's corrected from the high. So at current levels, the risk reward ratio is quite favorable. So it's a buy at current levels with a stop loss at 115.
Okay, thank you very much for that. We'll slip into a very short break on that. We'll come back with more on the markets.
Welcome back. You're watching our continuing coverage here from Davos 2023. I'm Shireen Bhan, and joining me now is the Deputy CEO and Group CFO of the Inca Group, Yuvinsio Moitsu. Thanks very much for joining us here in Davos. I want to start by talking to you, Yuvinsio, about the report that IKEA has just put out, the Homes Report, and that throws up some very interesting insights about how consumers feel today. And they are worried about inflation, they are worried about the cost of living, and they're deciding to postpone big life decisions.
Yeah, namaste.
Namaste.
From Davos.
From Davos.
Yeah, this report is actually quite relevant for us because it's giving a lot of insights together with the home visit we make. And there is a red thread, and it's the need to feel safe at home. In the times where we live, the value of home is more important than ever. It's a place to meet the family, it's a place to socialize, it's a place to really find a solution to your dreams. But the most important thing, they are asking also for affordable solutions, because in the times we are in, affordability and life at home comes together.
So, you're talking about affordability, and that is the big ask as far as consumers are concerned. What is that going to mean in terms of a company like IKEA? How do you ensure that you can bring costs down even further, given the fact that there continues to be pressure on supply chains at this point?
Yeah, it is true that the last year, the whole economic situation and the tension in the supply chain had put pressure on prices. That's why it's even more important than ever to really find a solution in the way you transform the business and give solution from the low-cost point of view. An example is India. In India, we're offering 900 products less than 200 rupees. That's why I like to say that it's not about IKEA contributing to a better India, it's how India is making IKEA better, because we are also learning a lot of things from India.
Let's talk about how India is making IKEA better. I'll talk about, of course, the domestic opportunity and IKEA's expansion plan. But before that, let me talk about the role that India is playing as far as sourcing is concerned. You've been sourcing from India for decades now. What is the value of the current sourcing that you have from India, and how do you see that changing, especially as you try and build up on supply chain resilience?
It's more than 400 million euros. We are also for the retail activities close in the region of the 30% local sourcing, and we plan to double and then to double again, because we are here for the long term. And this is why IKEA is not only able to secure low price for the consumer, it's also a good way to really find the merge with the India supply chain. So that's why the Make in India and the affordability comes together.
Okay, that is our managing editor Shireen Bhan in conversation with IKEA Inca, a global head, speaking about a lot of trends as far as consumption, inflation and the impact on demand is concerned as well. But let's focus on our own markets now. Bank of India, Rima was mentioning how the stock is lower in trade today, and it is, of course, in focus. So let's discuss the earnings fine print, because it was a robust NII growth for the company with best ever net interest margins in 31 quarters. So the stock, of course, has recovered, but of course, still under a lot of pressure. Let's discuss this with A.K. Das, the MD and CEO of the bank, joining us now to discuss this. Mr. Das, good afternoon. Thank you so much for joining us. Well, it has been a good quarter. Net interest margins at a 31-quarter high is what we are seeing. Do you expect the net interest margin momentum to continue? You had earlier said that it can be sustained at 3% plus levels. Are you continuing with that guidance?
Yes, very much. I am very optimistic that yes, there will be some amount of moderation post repricing of liabilities. Now that cycle is yet to get completed. So there will be some amount of moderation, but I'll be happy if it ranges between 3 to 3.25. As we know, 3% is the global benchmark. So I'm pretty confident that with higher, better yield, we can offset the rise in cost of deposits, if any, and above 3% is my take.
Okay, so 3 to 3.25% is the guidance on margins, and this is despite deposit rates going up and the repricing still continue. Sir, can you talk about this big increase that we've seen in your write-offs? There's a near 35% jump in your write-offs this quarter sequentially at 2,500 crore rupees. What led to that? Any guidance on the same?
See, basically write-off is a balance sheet management tool, and we go only for write-off where there are no recourses left. Most of the write-off was long pending NPAs in the overseas markets. So we thought it prudent to hive it off from our loan book. It's a cleansing exercise. But more than that, I should say, you would have noticed about 1,200 crore of slippages happened, but we could recover. Cash recovery and upgradation was to the tune of more than 1,800 crore. And slippage management continued to be our forte. Our slippage ratio as a percentage of standard advances was 0.27, probably, I believe, one of the lowest in the industry. So overall, I think recovery has been good. We targeted about 2,500 crore of recovery. That has happened. And obviously, the gross NP ratio has come down substantially to 7.66%. Our take is to take it below 7% at least by March 31st, 2023.
Okay. So your net assets and NPAs will come down below 7%. Sir, the RBI had pointed out some financial divergence, which required you, I think, to make additional provisions of 1,419 crore. Could you give us what happened over there and what is the way forward?
Yeah. As you can see in the P&L column, you would have seen there is an increase of standard asset provisioning. RBI had given us a 3-quarter dispensation starting with September up to March for providing for that 1,400 crore. So we provided 400, the first tranche in September.
Got it.
So although we had the time up to March, we decided to go for the entire provisioning in this December quarter only.
Okay.
That's how the number is looking a little elevated, but again, it safeguards my March P&L.
Okay. Understood.
Since we had adequate operating profit, we thought why not,
Okay, understood, Mr. Das. So you have made that provision in the December quarter itself, though you had time till March to do that. Can you tell us what are the resolutions expected in the NCLT? What is this segment looking like for you? Expecting more resolutions to come by in your books?
Yeah, if you see our 38,000 crore of NPA, gross NPA, out of that almost 34,000 are in, NCLT. And almost out of those 34,000 crore, 23,000 is for accounts where the resolution has been filed by other banks. The progress has not been very satisfactory, I must say. It's for all banks put together. But on a very conservative basis, at least 600 crore. There will be some upside to that because of some bigger accounts getting resolved in this quarter as per the reports. But at least 600 crore worth of resolution will happen, which can bring down our gross NPA by further 2,000 to 2,500 crore.
Okay, so 600 crores is what you're expecting in this quarter, or when you said you're expecting more resolutions to come by, it can actually be a bigger number than that?
Yeah, it can be a bigger number, yes.
Any ballpark that you're looking at, Mr. Das? Something that you might be, providing for or at least expecting to come by?
No, one major ballpark I can tell you, this RBI mandate, what you told, the provisioning we have done on standard assets. I think by March, many of those assets will be completing 180 days. So if the account performs well, we can expect a significant number of write back there. So that will further strengthen my P&L. It's a big amount, and I'm sure by March, most of it should be written back. So that will give us further cushion to improve our PAT.
Okay. Your loan growth has been about 18-19% on a year-on-year basis. What's the guidance on the same? Can you sustain this near 20% loan growth for the next couple of quarters? What's the visibility that you have, the conversations that are ongoing with corporates?
Small correction, it's been 16% loan growth global, and domestic it has been about 12%. And in that, RAM segment has grown by 13%, corporate has grown by about 17%, driven by select segments like metals, chemicals, textiles, construction, and power distribution and transmission. I consider, since it is 12% only, I will stick to the 12% growth number. Of course, with a caveat that compared to September, where the availment was only about 64% in ODCC accounts, that has improved to 69% by December. We have spent a lot of efforts in that, reaching out to customers and understanding their issues and all. So that number has come, but on a very conservative basis, which will have a 1% to 2 percentage point upside. I think minimum 12% credit growth is what we are aiming at for March.
Okay, so 12% growth is what you are aiming for. Last question before we let you go, Mr. Das. Can you just tell us and give us a sense of what the business momentum is looking like across categories? And do you have any fundraising plans currently?
Yeah, we recently raised about 1,500 crore of AT1, and there was a lot of interest shown. And with backed by good Q3 numbers, in fact last 12 quarters we have been earning profits and good improvement in profitability. We are planning to hit the market with a QIP issue very soon, where we are aiming for about 1,500 crore. And to that, if I add my return earnings of about 3,500 crore conservatively, I think my capital adequacy ratio will be definitely in excess of 18% by March 23. That should give us good credit appetite to pick up other assets also. So all in all, I think our CRAR and our CET1 is in a very strong footing.
Okay, so very quickly, your deposit growth is quite low. Could you tell us the reason for that? Are you taking steps to improve your deposit growth? Because ultimately, it's the deposits that you garner which will feed into the loans that you will have to give to corporates.
Yes, I agree with you. Deposit growth has been very muted, and not only for our bank, for many banks it has been muted because of the liquidity position prevailing in the system as a whole, post-COVID in particular. But one silver lining is there. Our CASA franchise has remained robust as ever before. If you can see, our CASA percentage is about 45.5%, which is one of the best in the industry, I should say. Retail term deposit, yes, there have been few concerns. So we have been doing mid-course correction in giving, rate increases to attract new customers. But I believe interest rate is only one of the few variables that affects deposits. We are trying to reach out to other avenues like refinance and all. And with that, so far, so good. We are having a LCR of in excess of 130-140%. So that's not the biggest concern. But yes, deposits are under our radar. We will be monitoring the movement and going for mid-course correction wherever it is deemed necessary.
Okay, Mr. Das, thank you so much for joining us and explaining to us Q3 numbers and what the outlook going forward is. Of course, the deposit growth is something that we'll be tracking as well. We'll do one thing, we'll slip into a short break. As we do that, here's an important information for our viewers. Don't miss out the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
Welcome back. Mastek reported its numbers about an hour back and the stock is down 3%, and that's because the street is worried the organic revenue growth for Mastek this time is flat. So the companies reported a 3.1% constant currency quarter-on-quarter revenue growth. But that, according to analysts, would be attributed to the MST acquisition that they did. Stripped of that, the organic revenue growth would have been muted yet again for Mastech, and that is something that the street is disappointed with. Apart from that, as a pocket, watch out for these new age tech companies. Delivery is under pressure. That's down close to about 1.6%. Nykaa has lost ground. Zomato is under pressure. So across the board, these stocks are losing in trade. For the markets, we're up 0.5% on the benchmark indices. The Nifty is below 18,000. The mid-caps are struggling. The mid-cap index is down 0.5%. Thank you for watching this show.